Hey there, and welcome back to USA Move Guide. If you're a green card holder watching this right now, I need you to stop what you're doing and pay very close attention because what I'm about to share with you could literally save you thousands of dollars or cost you thousands if you ignore it. I was talking to Maria last week. She's been a green card holder for about 8 years now. Works hard, saves her money, does everything right. And she called me almost in tears because she just found out about a new tax regulation coming in 2026 that she had no idea about. She thought she was doing everything correctly, but this one change, it's going to hit her savings account harder than she ever imagined. And here's the thing, Maria's not alone. There are millions of green card holders across this country right now who have absolutely no clue that the rules are changing. They're going about their daily lives, working, saving, planning for their future, and they have no idea that 2026 is bringing a tax law that could completely change how their money is treated by the IRS. So today, I'm breaking down everything you need to know about this new 2026 tax law, why it matters specifically to you as a green card holder, and most importantly, what you need to do right now, not next month, not next year, but right now, to protect your hard-earned savings. Let's dive in. So, let me start by saying this. I know taxes aren't the most exciting topic in the world. Trust me, I get it. But when it comes to your financial security, your ability to provide for your family, your retirement plans, your children's education fund, this stuff matters more than almost anything else. And the reality is that as a green card holder, you're in a unique position when it comes to tax obligations in the United States. You're not a citizen yet, but you're also not a temporary visitor. You're somewhere in the middle. And that middle ground comes with its own set of rules that a lot of people just don't understand. Now, before we get into the specifics of what's changing in 2026, I want to make sure we're all on the same page about something really important. When you became a lawful permanent resident of the United States, when you got that green card in your hands, you also became what the IRS calls a resident alien for tax purposes. And what that means is that you're taxed on your worldwide income, just like a U.S. citizen would be. It doesn't matter if you earned money in your home country. If you have a bank account in Brazil or India or the Philippines or anywhere else in the world, if you're a green card holder living in the United States, the IRS wants to know about all of it. A lot of people don't realize this at first. They think, well, I earned that money back home before I even moved to America, or I have a savings account that my parents set up for me when I was a kid in another country. Surely that doesn't count. But it does. It absolutely does. And this is where people get into trouble because the IRS doesn't care whether you knew about the rule or not. Ignorance isn't a defense when it comes to tax compliance. So, what's changing in 2026? Well, the Treasury Department and the IRS have been working on new regulations that strengthen the enforcement of something called FATCA. That's the Foreign Account Tax Compliance Act. Now, FATCA has been around since 2010, but enforcement has been inconsistent and a lot of foreign banks weren't really playing ball the way the U.S. government wanted them to. But starting in 2026, there are going to be much stricter reporting requirements, much heavier penalties for non-compliance, and a much more aggressive approach to tracking foreign assets held by U.S. tax residents, which includes you as a green card holder. Here's what this means in practical terms. If you have a foreign bank account with more than $10,000 in it at any point during the year, you're required to file what's called an FBAR, a foreign bank account report. This isn't new, but what is new is how strictly they're going to enforce it. The penalties for not filing an FBAR can be absolutely devastating. We're talking about fines of up to $10,000 per violation for non-willful failures. And if the IRS determines that you willfully failed to report your foreign accounts, the penalty can go up to the greater of $100,000 or 50% of the account balance. Let that sink in for a moment. 50% of everything you have in that account gone just like that. But it's not just bank accounts. The new regulations are also cracking down on foreign investments, foreign retirement accounts, foreign real estate holdings, and even certain types of foreign trusts or business interests. If you own property in your home country, if you have a pension plan from your previous employer overseas, if your family back home set up any kind of investment account with you listed as a beneficiary or co-owner, all of that needs to be reported. And starting in 2026, The mechanisms for the IRS to find out about these assets are getting significantly more sophisticated. You see, under the enhanced FATCA regulations, foreign financial institutions are going to be required to report much more detailed information about their U.S. account holders directly to the IRS. And if these institutions don't comply, they face their own set of penalties and could even be cut off from the U.S. financial system. So these banks, these investment firms, these institutions around the world, they're highly motivated to comply. Which means if you have assets abroad and you haven't been reporting them, the chances of getting caught just went up dramatically. Now, I know what some of you might be thinking. You might be saying, well, I'm planning to move back to my home country eventually anyway, or I'm not really planning to stay in the United States permanently, so maybe this doesn't apply to me. But here's the thing. As long as you hold that green card, you are subject to these rules. It doesn't matter what your future plans are. It doesn't matter if you spend most of your time outside the United States. If you're a lawful permanent resident, if that green card is active, you have these tax obligations. And this is actually where a lot of people get into really serious trouble. There are green card holders who moved back to their home countries years ago who haven't lived in the United States for a decade or more, but they never formally abandoned their green card status. They just left and assumed that was the end of it. But legally, they're still green card holders, which means they're still supposed to be filing U.S. tax returns every single year and reporting all their worldwide income. And when the IRS finally catches up with them, which is happening more and more frequently now with these international information sharing agreements, they're hit with years and years of back taxes, penalties, and interest. It can be financially ruining Chile. So, what do you need to do? First and foremost, you need to get organized. You need to sit down and make a comprehensive list of every single financial account you have outside the United States. Every bank account, every investment account, every retirement or pension plan, every piece of property, every business interest, everything. And I mean everything. Don't leave anything out because you think it's too small or insignificant. The IRS wants to know about all of it. Once you have that list, you need to determine whether you've been properly reporting these assets on your tax returns. Have you been filing FBARs every year when required? Have you been including your foreign income on your Form 1040? Have you been filing Form 8938 if your foreign assets exceed the reporting threshold? A lot of people have no idea what I'm even talking about right now. And if that's you, that's okay. But it means you need to get professional help immediately. And I want to be really clear about something here. I'm not trying to scare you unnecessarily, but I am trying to give you a wake-up call if you need one. The consequences of not complying with these reporting requirements are severe, and they're getting more severe. But here's the good news. If you come forward voluntarily and correct any past mistakes before the IRS discovers them on their own, you have options. There are programs specifically designed to help people who made honest mistakes get back into compliance without facing the worst penalties. The IRS has something called the Streamlined Filing Compliance Procedures, which is designed for taxpayers whose failure to report foreign income and assets was non-willful, meaning you weren't trying to hide anything or evade taxes, you just didn't know or made a mistake. Through this program, you can file amended returns, pay any taxes owed plus interest, and potentially avoid the crushing penalties that would otherwise apply. But you have to come forward before they come to you. Once the IRS initiates an investigation or contacts you about unreported foreign assets, it's too late to use these programs. Now let's talk about some specific situations that I see all the time because I want to make sure this is really hitting home for you. Let's say you came to the United States 5 years ago. You got your green card. You've been working hard building a life here. But back in your home country, you still have a bank account that you've had since you were a teenager. Your parents still deposit money into it sometimes as gifts. Maybe there's $15,000 or $20,000 in there. You haven't really thought about it much because you don't use it regularly and all your day-to-day finances are here in the U.S. Under current law, you should have been reporting that account every single year on your FBAR. And depending on the balance and whether you received any interest or your parents' gifts exceeded certain thresholds, you might have had additional reporting requirements as well. If you haven't been doing this, you're out of compliance right now. And with the 2026 changes, the likelihood of this being discovered goes up significantly. What you need to do is consult with a tax professional who specializes in international tax issues. Figure out exactly what your obligations have been and get yourself into compliance as quickly as possible. Or here's another common scenario. You inherited property from a relative in your home country. Maybe it's the family home. Maybe it's a small piece of land. Maybe it's an apartment that's being rented out. You're one of several heirs, so you own a percentage of this property. You might think, well, I'm not really managing it. I'm not receiving much income from it, if any, so it's not a big deal. But the IRS sees it differently. That's a foreign asset that needs to be reported. Any rental income needs to be reported. Any gain when the property is eventually sold needs to be reported. And if you're not doing these things, you're setting yourself up for problems. I also want to talk specifically to those of you who are supporting family members back home because this is incredibly common among green card holders, and there are tax implications that you need to understand. If you're sending money to your parents or your siblings or other relatives, that's generally not a problem from a tax perspective. You're allowed to help your family. But if you're sending large amounts, if those family members are then depositing that money into accounts that have your name on them, if there are joint accounts or shared assets, that can create reporting obligations that you might not be aware of. And here's something that catches a lot of people off guard. If you're a green card holder and you receive a gift from a foreign person, whether that's a family member or anyone else, and that gift is worth more than $100,000, you have to report it to the IRS on Form 3520. You don't have to pay tax on it. Gifts generally aren't taxable income in the United States, but you do have to report it. And if you don't, the penalty is 5% of the gift amount per month, up to a maximum of 25%. So if your parents gave you $150,000 to help you buy a house and you didn't know you were supposed to report it, you could be looking at penalties of over $37,000. The 2026 changes are also going to affect how the IRS monitors currency transactions and large fund transfers. There are going to be enhanced systems for tracking international wire transfers, and financial institutions are going to have to report more information about their customers' cross-border transactions. This means if you're regularly moving money between countries, even if it's your own money moving between your own accounts, it's creating a data trail that the IRS can see. None of this means you're doing anything wrong. You're absolutely allowed to move your own money around, but it does mean you need to make sure you're reporting everything properly. Let me also address something that I hear a lot. People who say, well, I already pay taxes in my home country on this income or these assets, so why should I have to pay taxes on it again in the United States? And that's a totally fair question. The good news is that the U.S. does have foreign tax credit provisions that allow you to credit taxes you've paid to another country against your U.S. tax liability. So in many cases, you're not actually going to end up paying double tax on the same income. But, and this is important, that doesn't mean you don't have to report it. You still have to tell the IRS about the income, claim the foreign tax credit, and file all the necessary forms. You can't just not report it because you already paid tax somewhere else. Here's the bottom line, and I really want you to hear this. Being a green card holder is a tremendous privilege and opportunity. It allows you to live and work in the United States, to build a life here, to pursue your dreams, but it also comes with responsibilities. And one of the biggest responsibilities is tax compliance. The rules can be complicated, especially when you have financial ties to more than one country. But complexity is not an excuse. You need to understand your obligations, and you need to meet them. With these 2026 changes coming, right now is the time to get your house in order. Don't wait until you get a letter from the IRS, because by then, it's going to be much more difficult and much more expensive to fix. If you haven't been properly reporting your foreign assets and income, if you're not sure whether you've been doing things correctly, if any of what I've talked about today has made you nervous or uncertain, you need to take action now. Consult with a qualified tax professional, preferably one who specializes in expatriate and international tax issues. Yes, it might cost you some money up front to get professional advice, but I promise you it's going to be a lot less money than you'll pay in penalties if you don't get compliant. And look, I know this is a lot of information and it can feel overwhelming. You came to the United States to build a better life, not to become a tax expert. But knowledge is power. And now that you know about these changes coming in 2026, now that you understand how serious the reporting requirements are and how strictly they're going to be enforced, you can take the steps you need to take to protect yourself and your family. Call to action and close. If you found this video helpful, please do me a favor. Hit that like button and subscribe to USA Move Guide because we're constantly bringing you the latest information on immigration policies, tax changes, and everything else that affects your life as a green card holder or someone pursuing permanent residence in the United States. Ring that notification bell so you never miss an update that could impact your financial security or immigration status. And here's what I want you to do right after you finish watching this video. Leave a comment below telling me, did you know about these reporting requirements? Have you been filing FBARs? Do you have questions about your specific situation? I read every single comment. And while I can't give personal tax advice in the comments, your questions help me understand what topics I need to cover in future videos. If you need help right now and can't wait, I've put some resources in the description below, including links to find qualified international tax professionals and information about the IRS streamlined filing compliance procedures I mentioned. Don't put this off. Your financial future is too important. Thanks so much for watching, and remember, staying informed and staying compliant is how you protect everything you've worked so hard to build. I'll see you in the next